that the sound is okay before I start anything. Yep, great. Okay. All right. So we are going to now. Also, could I quickly check if any of you are, if any of you sign up to my Telegram group with the market data, seasonals, or the fundamental, the Forex Telegram group. Has anybody signed up to that? I'm just going to show you sort of something. Yeah, great. Okay. All right. Let me show you something because now I want to get your opinion on this because I'm going to post potentially a slightly different way of tracking the seasonals for you guys this week, which I think is better. So the old way is this. This is the old way of doing it. So you kind of get Aussie buy, pound buy or neutral. Now this is all calculated against the dollar. So the issue that I think there may well be now, the 3 month also, I wonder whether that's even worth it. Now, if so, I'm going to get your opinion on it. If you want me to post just this, just the new one, or both, I'm happy to do it. This is against the dollar, so this is sort of telling you how these things tend to track against the dollar over the next week, month, and 3 months. I think the 3 month might be a little bit useless to us because I don't think anybody's trading and holding for 3 months. If you are, then I'll, I'm happy to sort of give that to you as well. But this is the new way now because that's all tracked against the dollar. I don't think it gives us enough information about if we like a currency. Let's say we like the Aussie and we're thinking about it against the pound. Well, all it says is buy. So we don't really know how it's going to track against the pound or even buy neutral. Buy neutral would suggest the Aussie stronger, but it's not that explicit. So this is the thing I've just been working on to see if you prefer it. And for everyone else that doesn't sign up, this is still part of the market update. So we're still getting down to business. Okay, so this is the potentially the new format if you like it. And as I say, I'm happy to post both in. But what this gives us is not only the Aussie against the dollar for the week, but it also tells us what it's like against the pound, the CAD, the euro, the yen, the Kiwi, the Swissy. So what the good thing about this is not only does it tell us how it performs against the others, but it also shows us which is the strongest currency seasonally going into the week over a 20-year period. It also shows us over a month. Oh, why is that not there? That should be a buy. And against the pound, it is a buy as well. Oh, sorry, pound yen. Now, let me fix this up and just as we go here. This one here. Okay, let me just double check this. So pound versus the yen over the month is also a buy. The CAD over the yen is a buy. And that leaves the yen. So so this tells us over the month that the Aussie's very strong. The Kiwi's pretty strong as well. It's not as strong as the Aussie, but it's pretty strong as well. And we can see that the weakest currency tends to be over the next month, it tends to be the yen, and over the next week, it tends to be the yen. So what this should say to us is that the Aussie yen, if we're thinking about the old way, it doesn't really sort of push us towards a currency pair, but this pushes us towards the Aussie yen. Ah, great. Okay, yeah, KW, yeah, it is because it needed to be tracked against something. So it's really sort of like comparing Aussie dollar and all this sort of thing. The COT is a little bit trickier, but I will try. I need a really good formula now with a COT. What the COT is telling us this week is that the The Aussie, now this is the problem. This is where we sort of run into issues, right? The COT is telling us that the Aussie is a sell, and it's a pretty sort of hard sell. It also tells us the pound is a sell, and it tells us that the yen is a sell, which does sort of still suggest that the Aussie yen is okay. But the COT data is not in agreement with the seasonals. Now we have to sort of understand. I will try and do it, Gary. I'll see if I can work out a good formula for doing the COT. The problem with the COT is that there is a formula to do, but my concern is that it's going to take a lot of time to do every single currency against each other. This is kind of, you know, part of the same analysis when I'm bringing it all up, so it takes a little bit longer to do, but not a whole, you know, afternoon or whatever. But the COT might take a bit too long, so I'll see if I can get it a bit clearer with the COT. Now the other thing with the COT is that it is delivered against the dollar, so the seasonals you can track Aussie yen, but COT you can't track Aussie yen explicitly because that's not what the COT report is showing you. It's showing you how these currencies are performing against the dollar. So not quite as easy to do. And if there's a formula, then I'll try and work it out. Oh, so if you were looking at the Aussie, let me just see if this explains it. So these are the seasonals for the week ahead, right? And it's telling you now what you're looking at is that the one on the left is telling you, you know, what you're trying to do is look at the one on the left and see how it compares to the one in the top row here. So the Aussie this week against the pound is a buy, against the CAD it's a buy, and right the way across it's a buy, which makes the pound against the Aussie, of course, it's a sell. Okay, and it's pound against the pound is obviously not one. Against the CAD it's a sell. Against the euro, it's a buy. Against the yen, it's a buy. So this is really what it's showing you. And then when you go to that, that's the data week on week. You know, that's telling us for the next week, over 20 years of historical data, the pound tends to underperform the Aussie and outperform the euro. Now, with the monthly, it tells us it tends to underperform the Aussie and overperform the euro. So you're looking at a short-term trend and a long-term trend, which suggests historically the pound is in a pretty good place. Now, if you look at the euro is quite an interesting one, because if you look at the euro dollar after a week is a buy. There's the dollar there. So it's the euro we're tracking here. Against the dollar, it's a buy. But if you look at the euro against the dollar over a month, it's a sell. So that tells us that there's a short. So the longer term trend is actually sell euro dollar, but there may well be a rally. Now the thing about seasonals is that they're not really very good for timing. So the monthly is much more important to follow than the weekly. But it's still useful to have the weekly because it kind of tells us what, if we get a setup on a short term, we can actually, you know, use the shorter term trends. Does that explain it, Thomas? I don't want to kind of lead you down a confusing path. Great stuff. Okay, you're welcome. Now, as I say, the COT data is different. Now, the COT data is actually bullish on the dollar, which is slightly problematic, except for if we look at the dollar yen. If we were to use COT data and seasonals, it actually suggests a dollar yen buy, because the seasonals on a short term are a buy. So the yen sell against the dollar, or if we look at the dollar here, dollar versus the yen is a buy. Dollar versus the yen over a month is a buy. Now COT data is a buy for the dollar. It's the strongest currency right now from the COT data. Brilliant, Paul. I'm all right. Well, I'll post these up. Does anybody want me to post up a 3 month? Because the 3 month I would suggest is pretty useless. But if anybody really wants the 3 month, then I'm happy to do it. If not, I'll just do the 1 week and the 1 month, and we'll stick to the immediate trends. Grace, you want the 3 month? No worries. You're holding for longer periods, are you? No worries. I will do the 3 month. I will do the 3 month as well. And I'll tell you what, I'll do the 3 month looking like this. So I'll post three different seasonal tables, and it will have the 1 week, it will have the 1 month, and it will have the 3 month. You're welcome, Benedict. No problem at all. Okay, so now the COT data is week on week, so it's a completely different period. So when you're looking at COT data, you are looking at how were the participants that are delivering their information to the COT report interacting with the market. Now, over the last week on week, cool, Thomas, that's fine. Well, you'll have yours as well. So the people that want longer term positions, then the seasonals is where you're focusing, not the COT data. The COT data for longer term positions, all you're really doing is seeing if the COT data continues to back up your theory. But as a signal over a 3 month period, it's relatively useless because it's delivered once a week. So all we're looking at is what were the participants doing last week. Now, last week they were buying dollars. They were selling yen. They were selling Aussie. They were selling. They're getting a little bit cooler on the Kiwi, and they are selling the pound. Sorry, KW. Yeah. So this is where I'm absolutely happy to take any suggestions here. Need a label to show the primary heading. Else maybe can't read not in the intended way. When you say the primary heading, what do you mean by that? So do you mean the 1 week and the 1 month? What do you mean by that? I'll try and put a little description in when I post it. See, pound CAD. Yeah. Now the problem though with that is that if I put the pound CAD, then you won't have any. I mean, you could get rid of this, but I don't know whether that's really going to help. You're reading left to right. You're reading left to right. Now, what I'll do instead, I appreciate that so it might cause a bit of confusion. So what I'll do instead, just to make the table, I think it looks cleaner this way. If you guys disagree, I'm totally happy to take any suggestions. But yeah, it's difficult, isn't it? I mean, I thought the same thing, and I thought, is it clear enough? But what I'll do is I'll try and put in a text box which sort of suggests which way you should be reading it, and hopefully I can make the language clear enough so it's not also confusing. No worries. I'll put a text box in down below each one. So COT data is suggesting something different now. The seasonals are not a timing tool. What they are telling us is what tends to happen at this time of year. Now, the thing about the Aussie is that the Aussie is a growth currency. So when the world is buying stuff and growing, the Aussie will tend to do better because it is a risk-on currency. Because people buy commodities and things that Australia mines and sells to the market. It's the same with the CAD really, and the same with the Kiwi. So when the Aussie and the Kiwi tend to be bullish, it usually means that the world is in a relatively bullish mode. So it's usually sort of quite good for equities as well. The yen is the opposite side of that. So when the yen is buying up, it sort of tells us that there's a little bit of risk off, there's a bit of concern in the world, some fear. So what this is suggesting is that normally between November and October, there tends to be a global boom, if you like. A global growth tends to happen at this time of year. So that's what it's sort of suggesting over historical data. Now, the question you have to then ask yourself is, are we in one of those periods now? Do we have a situation where the globe is growing? Should we be sort of like suggesting that this particular year is relatively regular? Is it a normal kind of year where this stuff will happen? And that's where we bring in COT data, and that's where we bring in, more importantly, the fundamentals. The fundamentals will drive it all. So let's have a look at the fundamental data and see what's been happening, and then we'll bring up the charts. Right, so if we sort of like bring up, actually, have you got my screen? I'm not sure you do. let me bring this over here. Let's stop that one. I'm going to bring this over here and make sure I can see that you're seeing it, because the problem is I'm not getting my green line around it. So you should get your green. There we go. Right. So now we're going to look at the fundamental data here. For 1 week seasonals, do we use it to trade intraday only, and for 1 month seasonals, use it for daily, weekly time frame? Yeah, to a point, Muhid. Yeah, yes, or Yasin, sorry. To a point. I mean, you can buy and hold. The thing about the seasonals, as I said, they are suggestive rather than an absolute. You know, not the fundamentals are absolute, but the fundamentals are really what's driving the market. The seasonals are suggestive of what tends to happen at this time of year. So what the seasonals are saying is, usually we will get data which boosts the Aussie over the next week, and it usually would boost the Aussie over the next month. That's what it's saying. Then you sort of come, it really, because the data is pushing. I mean, I know we are technical analysts, but the technicals are all formed from how people feel about the market. And how people feel about the market is ultimately driven by what's happening with the data. So it's a difficult one to say that you're going to use seasonals for intraday, because it's not the seasonals that are driving the picture. It's the fundamentals that are driving the picture. The seasonals just back up what the fundamentals, are they backing up? That's really what you're asking yourself. Are they backing up what the fundamentals are saying? They suggest at this time of year we should be long Aussie. Is that what's happening fundamentally? Because if it is, then we can use the seasonals for whatever time period that they are delivering. But if it's not, if they're out of sync, then the seasonals actually become pretty useless. So you want to sort of put it third on your list when you're looking at your checklist. You're going fundamentals number 1, hot data number 2, because it's got a better time. It tells you more about what's going on right now. It's a week back, but it's still telling you what's going on closer to now. And the seasonals are telling you historically what's happened. So they are number 3 when you sort of like thinking about how you're going to make a decision that when decisions are formed off the chart. Okay, so yeah, so you can't really sort of say you should use it sort of intraday, because it's always going to be about the data. Right, so let's see what we got. No problem, Yasin. Let's see what we got. So this is now where we are right now. Is we have a situation where the Federal Reserve have basically come out and said we are data dependent. The Federal Reserve lowered interest rate, and let's focus mostly about the Fed, because the Fed will drive the whole globe. So if you're looking at fundamentals and you're finding the whole thing confusing, focus on the dollar, and focus on America, and focus on the Fed, and that will sprout everything else that you tend to need to know. Now, the Fed lowered interest rates by half a percent, which was a surprise, and the dollar tanked. Then the market decided that was going to be the state of play. So we're going to be selling dollars, and everything else is fine. We're going to get some boom times, because actually America's doing okay, but we're going to get some liquidity, and we're going to get some interest rate reduction, so people can start borrowing again, and start building again, and start spending again, and we get this boom. But then the Fed, then Jerome Powell comes out and he says, well, we are still data dependent. We haven't decided that we're going to be just cutting interest rates, without anything to back that up. We've had a bumper cut, but it could be the end. What he's effectively saying is he doesn't expect it to be the end, but he's still data dependent. He's still looking at the jobs market. Since then, if we look at the jobs market, and let's look from last week. Look at the jobs market and inflation. They're the sort of like, the two aspects that they're sort of like looking at. But if you look at what's been really happening, when we look at the data from the United States, we have we've now ISM manufacturing PMIs were basically the same. So we had no growth, no decline. In fact, I mean, under 50 is decline, but it's a similar sort of decline. We had prices coming down, so disinflation, which is good, but jobs openings growing. So that was against really what the Fed were, I guess, starting to hope for. They thought maybe they'd need to save the jobs market a bit. ADP employment change was growing. 143,000 jobs made in the United States. That's the weekly change. And then when we come in and look at the initial jobless claims, there was some growth in there, continuous jobless claims. So there's some unemployment sort of numbers suggested here. Services PMI above 50 and just a little bit under that one. So there's still some growth in the States. When there's growth, then the Fed are less likely to act. So that was sort of like, again, that sort of dollar bullish to a degree. I mean, it's not a great number. But then we get ISM non-manufacturing. So the services area growth, 54.9 from 51.5. So this is dollar bullish. So, they cut interest rates. He's coming out and saying we're still data dependent. And then the data's delivered and the data is really quite strong. So we get into Friday and we get the non-farm payrolls number. And again, we get growth. So inevitably, after that, if you look at the chart, the dollar spikes. So if you're thinking about seasonals, and this is where we need to sort of start making some choices. If we're thinking about the seasonal movement for the dollar, which is sell right across the board, apart from against the yen, this does not suggest a sell. COT data does not suggest a sell. So now we got sort of two of the three metrics that we look at, which are the fundamentals and COT data, suggesting dollar buy, and we've got one metric which is lagging. It's historical data. Then that suggests a dollar sell. So that sort of starts to pale the seasonals a bit more into the background. So what it's suggesting is this time of year we should see some dollar weakness across the board, but the metrics aren't pointing to that at this stage. So that means we need to wait for metrics to point to the dollar weakness. So that's all it's saying. So all it's saying is that we don't have a suggestion right now that the seasonals are going to work. That's really what this is telling us. Right, now looking at next week, let's see what we have that might move the needle back in our favor. Because remember, COT data is going to be released on a Tuesday. So it's going to be delivered on a Tuesday to the CFTC, but only delivered on Friday. So that could change. So we don't really know what they're going to do this week. But let's have a look at what fundamentals might drive it. So we've got retail sales. Now that's on Thursday. Let's just see if there's anything before Thursday. Goodness me, it's quite a long way to wait, a long time to wait. Export price index. So this is about inflation. So this could drive us a little bit on Wednesday. Retail sales will probably trump that on Thursday. Given 3 stars here. Industrial production numbers, I mean, they're not going to be sort of that. And actually, it's quite a quiet week for the dollar. Hold on a minute. This is the wrong week. I want this week. Right, here we go. Now, Bowman speaking. Now, the speakers are, they're having a really big impact on the market right now. So that could drive things. Trade balances could have a little bit of an effect, but it would have to be a really, a very different print to really do anything. Lots of speakers. Nothing really there. There's lots of speaking going on. Okay, so this is where it gets interesting all of a sudden. So we're looking at Thursday. So now we know this. We know that the big numbers are going to be on Thursday. What we know is that the CPI data, initial jobless claims are market movers. These things are the things that move the market. So now straight away, what we should be thinking is we're going to get a bumper day on Thursday. And any trade that we get into before, we either need these numbers to be in our favor to continue our trend, or we wait before we get these numbers out. Now you can do either. It's not really not a problem. If you get a setup on a market before Thursday, then it's okay to take it. And the reason it's okay to take it is that the market participants will still be making choices on which way they think these numbers are going to go. If we get a weak CPI number, which they're actually looking at this, they're actually sort of forecasting CPIs to come from 2.5 to 2.3. You get a weaker CPI number in line with this, that would potentially weaken the dollar, which is really what we want, because that would sort of like match the seasonal data. We don't know about the COT data because that will be released on next Friday, but it would back up the seasonal data. So it's suggesting dollar weakness and Aussie strength, but this number, for it to really happen, needs probably to be 2.3 and below. That's what we'd be looking at. But it doesn't mean that if we get a setup to sell dollars on Monday, Tuesday, or even Wednesday, that we don't take it, because what we could be doing is setting up for this number to come in weak and getting a better price before it's released. Now, if you look at these CPIs year on year, they have been falling. So the trend is down. It got a little bit stuck at the start of the year, but look at it recently. These have been dropping. So if the trend in the data is to continue, then we would actually be expecting another drop in inflation, and that would probably drive the dollar lower, which is going to be in line with our seasonal. So we can quite happily trade that. Now, if we're looking at to hold that over a month, we're going to need to look further ahead at data points that are headed for a month. And really, what you really want to know is, now to pick against the right currency is obviously going to be a challenge. But right now it's suggesting we should be looking at the Aussie. But let's just see what the danger of trading the Aussie might well be. Let me just have a look where there we go. Here's the central banks here, right? So the Fed aren't their next meeting's not until November the 7th. That's quite a long way away. The RBA is November the 5th, so that's far enough away for it not to be a problem. You know, if we wanted to trade Aussie dollar long, the RBNZ is October the 9th. So now trading the RBNZ, so trading the Kiwi, even though the Kiwi's got relatively good seasonals, before the RBNZ is going to be a lot more dangerous, in my opinion. So there's going to be volatility. So we might be better off waiting for that decision before we bring the Kiwi into the mix. Now the others are ECB's not for another couple of weeks, and the BOC would be next up. So this is the RBNZ. So the Kiwi is going to be the one that's going to be a little bit trickier to trade this week. Now the question about intraday this comes into here. If I'm going to trade, if the Kiwi is in my setups Monday and Tuesday before that release, I'm probably more likely to trade that one intraday. So that's the thing that would push me towards intraday trading. Do I have a big data point that could really mess my trade up? Even the dollar might go into that category as well. You know, that might be a little bit problematic, which suggests that we might be able to trust the seasonals up until Thursday, but then maybe we should be clearing out of our trades and then waiting for the CPI data, and then maybe sort of putting the trades back on again. Or if we're far enough away after our entry, let them run. We can do both. Now let's bring the chart in and see what the charts are suggesting. Now we've got a vague idea, or we got a little bit more clarity about what we might want to do. So let's bring in the weekly. Now the weekly is going to be something that is going to be of importance. Now, so if we're thinking about the seasonals and the fundamentals, right now the fundamentals are pretty good for the dollar, and seasonals suggest dollar yen strength. If the dollar yen is to strengthen, I'd be looking at levels around this area to strengthen into. But there's already been a pretty big bar after last week's jobs data. So some retracement may well be on here before we go up, but that one's not. There's not a lot of clarity. There might be sort of retracement to this horizontal level. It might come down a little bit further, but there's not a lot of clarity except to say that the general picture is pretty bullish on this one. Do we have, would this be an attractive trade? Probably not until it retraced. So if it came back, then I might be interested in the dollar yen long. Let's have a look at the Aussie dollar. Now, the Aussie dollar is a lot more attractive because the Aussie dollar has managed to find a horizontal level. So the seasonal suggests we should be trading Aussie dollar long. The fundamentals for global growth actually aren't too bad right now. So Aussie dollar long's fine there. The COT data does suggest an Aussie sell. However, the COT data may well, the COT participants may well have been satisfied somewhat after this sell-off last week. Now, the daily is, this area is a little bit problematic, but the daily is showing us that we're on support. So drawing a trend line up here, we're right on top of that. So we've got some confluence here. So the Aussie dollar right now, as Monday starts, I would want to see a bit of price action to suggest that this area is holding, and then I'll be happy to buy it up at least until, I'd be happy to look for longs intraday or maybe even hold on to some longs up until Thursday. And then we'll see what happens. Now, if the market is predicting or forecasting weakness in CPI, that also suggests that there are market participants that would be okay with buying the Aussie against the dollar. Maybe selling the dollar offer up until that data point. So looking for a signal here. Now, I wouldn't just buy it. The next thing you need to do is find a buy signal. So I'll be looking for a buy signal in the Aussie dollar. I'll be happy to do that. Now, the other one was the Aussie yen. And the Aussie yen, yen's already started to move. Pretty good looking bar here. That's an engulfing body that's engulfed this particular body. And it's also looking somewhat like an inverted head and shoulders. Now, the inverted head and shoulders probably... Let's just see what kind of resistance. We are on potential resistance, so it does look like there might well be. Last week's bar wasn't particularly. The previous week's bar wasn't particularly bullish, and this is suggesting it could go higher. But now looking at this, I don't love where the price is. So I wouldn't be looking at this long. I mean, I think the terrain, if you like, the environment is okay for a long Aussie yen, but the price is not particularly attractive. That's at resistance, and I'd want to see it fall first. And if it did fall for a day or so, then I'd be okay to look for buying opportunities somewhere around here, 98.50. I'll be all right with that with a bit of retracement. So this is where I would sort of start bringing in my charts, and sort of I've got my idea with the seasonals that point us to a Kiwi and Aussie long and dollar and yen short. I've got my idea with the COT data, which is kind of against that. But I've also got my idea now with the fundamentals, which do suggest that we might see some dollar weakness going into the week, at the start of the week. The Kiwi is going to be more problematic because of that interest rate, potentially that interest rate decision. So that pushes me towards the Aussie. Now, so far, I'd be quite interested in the Aussie dollar as a long. What else could I maybe trade against the Aussie? Well, if I think about the fundamentals, then the euro is an option. But again, look at that weekly bar. That's managed to find some support there. So that would suggest that we might even start the week pushing a little bit, more to the upside. So we've got to bring our charts in and then analyze what the chart suggests, because we can come up with a concept and we can come up with an idea, but that idea has to be then made. That idea has to unfold on the charts. because the two things could be going on. One, we might be wrong, or two, we might be just wrong on our timing. So we got to wait for our timing. So I'll be looking at some Aussie strength and maybe against the euro, but not at this stage. Now the pound is also one that that may well come up as a potential sell. And this looks okay. I don't love this bar from last week, but let's just see where the where the resistance might be on the daily. Looks like there could be some there, and it looks like there could be some here. Pretty good looking bar there. So this is really telling us that, and if you look across the board with the Aussie, look at this Euro Aussie again. That was a relatively good day, a decent couple of days against the Aussie with this. So really, that's telling us that there's something that participants don't like about the Aussie. Now that could be the COT data was an Aussie sell. And as I say, they may well be satisfied, but they may not. So we've got to be careful with this. This is a potential sell area. If that lasts a few days, maybe to Wednesday, that area also becomes of interest because that would have some confluence. And that would also give us the RBNZ rate decision as well. And if they lower interest rates, or if they deliver a statement which is relatively dovish, then it might well affect the Aussie. So we've got to be a little bit careful with this as we go as well. So really sort of takeaway for this week is that the data is slightly in disagreement. Seasonals don't agree with the COT, and fundamentals at this stage are still, from last week they're dollar positive, but we might be around about to change with that inflation data due on Thursday. So we could be looking at dollar selling. Now, if dollar selling is the case, then I'd be really interested in the Aussie, and I would also be interested in the Kiwi at that stage because they would have also delivered their rate decision. So Kiwi dollar could also be of interest, and that's at a decent move to the downside. So I'll be looking at potential support and maybe to try and grab back into this area here. Maybe a little bit lower, might come down just a little bit lower, which would favor us. But if it kind of arrives down here Monday and Tuesday, then I'd be looking at a rally into Thursday. So and maybe sort of coming up to this zone, which would also give us, which would something that would look like the start of a head and shoulders pattern. There's the left shoulder, right shoulder, and we're looking for another shoulder over here if this this data can bounce up to that point. So I'll be okay to look for a and then into next week we could change our opinion, but I'll be all right to look for a Kiwi dollar long as well after Thursday. Okay, so that's the idea this week, guys. Any comments or questions, then feel free to post them in. If not, then I'll wrap it up. All good? Okay. All right. Well, I'm going to post in the seasonal. Brilliant. Okay, brilliant stuff. Thanks, guys. I'm going to post in the seasonal data into the seasonal Telegram, and I'm going to post in the seasonal data into the Forex Telegram, along with the COT data and the fundamentals later on. The fundamentals I'll do a little bit more work on, and just let you know what is being suggested. Now, be aware that when I post the fundamental data, it's telling us what has happened. It's not telling us what's going to happen. It just tells us what the strength is going into the next week. But you've got to be aware that the data that's going to be released is the key stuff. So we need to be sort of thinking about that those releases when we're in trades. Can they turn those trades around? We need those data points to allow our trades to go well or badly ultimately. So we shouldn't be scared of them. But we just need to be aware that what's been happening and what could happen. So when you're looking at economic data points coming up, The first piece of advice that I would give to you is have a look at the oh my goodness me, they're looking at a bumper cut actually on the Kiwi. Now that should weaken it significantly. So so Wednesday, be careful of the Kiwi this week. If that ultimately, if this comes in at 5, let's say they only lower interest rates by a 0.25%. So rather than 4.75%, which the market is looking for, they lower it by a 0.25%. So it comes in at 5. That is going to be Kiwi bullish potentially, which means that we can actually then look at Kiwi dollar long even from Wednesday, and then look to see if that CPI data comes in weak to really give us a trend. So watch out for the Kiwi data on Wednesday. The Kiwi could be a really good one to trade this week, but we're going to need to trade it after this release and not before it, in my opinion, because of the volatility. But yeah, so just a little tip. So if you're looking at economic data and how it might move the market, then the inflation data that we're getting from the United States is definitely a market mover, and you can see because it's got 3 stars. It's saying that it has a market impact. And if you look on Forex Factory, it'd be a red folder. Just open up the chart and see where the trend is. That's the quickest and simplest way to know, or to get a vague idea of what's happening and what's been happening. Because look how long this ended up lasting before it started to pump up again a little bit. Now, obviously, there are ways that you can try and predict what's going to happen with other data points. But if you find that difficult, or if you find that that's just a little bit beyond where you are at this stage, just open up the chart and just see where the trend is. This is telling you that the prices in the US have been reducing. They are on this downward trajectory. So the first thing you kind of think looking at the chart is, let's see if the trend continues. I'm going to assume that the trend will continue at this point. Okay. Right. I will leave you with that, guys, and wish you the best of luck for the week. Remember to stick in there. Keep learning, keep trading, and everything will be all right in the end, as long as you do the work, as long as you kind of prepare properly. Don't get drawn into trades that you're not really too sure and not too keen on. Really try and trade the ones that you feel really good about. So the key is prepare to feel good. Get your preparation done so you can feel pretty good about the trade. Doesn't matter if it goes wrong. You're going to learn something from everything that you do. But track the market and stick in there, keep doing the work, and everything will turn out okay in the end.